What's PMI? We're going to be learning about that today. All right, so PMI. Now, PMI is short for private mortgage insurance. Now, typically it's used to protect the lender. However, it is still very beneficial for the borrower in that it allows the borrower to go ahead and put less money down. Typically, in most conventional loans, your goal is to put down at least 20% onto the actual mortgage. So therefore, or onto the purchasing the property, in other words. And therefore, you have some skin in the game as how the actual lenders look at it and see it as. However, though, sometimes we run into situations where we want to do renovations on the home, or there's home or moving costs, or you just want to make sure you have just a little bit of a savings in case anything is to happen at all, so you can still cover things as you need to, have a little cushion there. And that's where pretty much PMI comes in, where the insurance is offered, the private mortgage insurance, it's offered in order to go ahead and help allow you to have that type of cushion you would need, or have that help you need to do the extra work on the property, the renovations, or whatever it may be. And typically, certain conventional loans, for instance, they still will require maybe like a 5 or 10% down payment you'll still need to do. But on the flip side, they won't require the whole entire 20% because you're going to use PMI to cover that remaining percent. So if you put 5% down the loan, well, your PMI will cover the 15% that remains that you should have put down. On the flip side, if you're doing 10%, they would have covered the other 10% then with the PMI. You get that down payment then, which is all taken care of at that point. But you're going to make sure, but you will be paying that additional PMI insurance within your mortgage. It's all wrapped up in there. You'll be paying that. So it'll be the PMI along with your typical. In most cases, you'll have an escrow in there you would have, as well as your insurance too, for your home insurance. It'll be all wrapped up there that you're going to be paying that. The escrow typically has your property taxes and all in there as well. No matter the case, though, that's going beyond where we're going to go and hit today. Today's the PMI aspect. So with regard to PMI, though, I also want to say that during the repayment process, pretty much you can remove PMI eventually. That's the great thing about it. You can remove it when you eventually get to that 20% that you should have been at initially when you first went ahead and purchased the home in the first place. When you reach that 20% mark, they can go ahead and remove the PMI or work towards removing it. Now, when they get to the 22% mark, they must remove it. Now, in mortgage terms, though, we don't necessarily say it in that sense. We talk about within the percentage of the loan balance that has been paid off, or that remains, I mean to say. So if you're down to an 80% on the loan balance remaining, that means you put 20% down then, right? But the 80%, though, is where they will go. When you hit that point, they're going to start looking into going ahead and shutting the PMI down. That's how they'll start looking at doing it. Now, if you get to 78%, they must do this. It's guaranteed they have to do it. So they will shut it down right away then at 78%. But beyond that, though, let's go ahead and break it down the paperwork with an example. So let's go and do that now. All right, so for our example, we're going to go ahead and start with the home value of a $600,000 home, is what we're going to start at. With that, now most typically, they're going to want a 20% down payment for any conventional loan, 20% down payment. Now, as I said previously, I believe, 5 to 10% is the usual average that conventional loans will allow you to do down payments down to in that area. As long as you're using PMI. So, no matter the case, though, where I was stating just a moment ago, 20% for the down payment is the consistent norm for conventional mortgages. On a $600,000 home, at 20% down, your down payment would be $120,000, which means that remaining mortgage value that you'd be paying on your mortgage is up to $480,000 you'd be paying. Now, if you instead decided to receive the PMI so you can only put 10% down. We'll just say in this example they decided that they would allow you to do 10%. So at 10%, and they as in the lender I'm saying too, by the way. Anyways, this is the 10%. So the down payment at 10% would put you at only $60,000, which is literally half of what you would have put down under the 20%. That means the mortgage value would be increased by another $60,000, of course, as well, which would be $540,000. That's how much extra you would be paying on your mortgage then. That also is $60,000 extra you need to pay off on your mortgage to remove the PMI. So PMI, very great to have, as I said previously. It's a big benefit. Allows for renovations to be done and to allow cushions into your accounts, your bank accounts, so therefore if rainy days happen, you're good to go. However, though, you do need to pay it off throughout the mortgage as well when you're paying on the mortgage. Now, in this example, 10% coverage is what the PMI had covered, 10%. Okay? And that would equate to the other $60,000 that we were discussing. So that's what you need to pay off to get to the full 20%, which would have been the mortgage value of $408,000 for the loan amount you'd be paying off them. Once you get that, the PMI can be removed. So, in other words, what I'm saying is when you get to the 80% remaining balance, which would, in other words, be the 20% down payment, of course, that value amount, that would be the value of $480,000. Once you get to that amount, that $480,000, the lender, you can request the lender to go ahead and remove that PMI. At 78% of the remaining balance, that would be at the value of $468,000 on the home value of $600,000, of course. The lender then must remove the PMI at that point. So this is a prime example of purchasing a home at $600,000. Typically what the percentage you would need to put down if you're doing 20%, but if you decide to use PMI, which is what our focus is today, an example of using PMI as to how it exactly would work if you put 10% down, for example. So I hope I was able to help those understand what PMI is. If you have any questions, thoughts, or even comments, please go ahead and comment down below in the chat down below. Also, if you're looking for any knowledgeable mortgage broker, see me out. I'm always happy to help. And on the side note, don't mind the clutter in the background. Like most of you, I'm a regular guy, which means parenting is first, and being a beautician dead last. So follow me and subscribe for more videos like this. And until again, take care.